Donald Trump today, vowed to impose a 200% tariff on John Deere's imports.
Just back in June, John Deere announced that they were relocating specific production lines to facilities in Mexico. Now, Donald Trump disagreed with this decision and left a significant threat that would ultimately affect the company's bottom line.
I'm just notifying John Deere right now. If you do that, we're putting a 200% tariff on everything that you want to sell into the United States.
John Deere just made a bold move that's sending shockwaves through Washington and turning heads on trading floors from Wall Street to São Paulo. On the surface, it looks like a straightforward business expansion. But dig a little deeper and it's clear this is part of a much bigger battle, one that spans trade policy, political alliances, and the future of the global workforce. The company has officially announced it's expanding operations into Mexico, not years down the line, not hypothetically, but right now. A brand new manufacturing facility is already in motion, with construction underway and plans to be fully operational by 2026. And the reaction? Nothing short of explosive. Before we dive deeper into what this all means, take a second to hit that like button. It helps us beat the algorithm and lets us know you're with us. Donald Trump didn't hold back. As soon as news broke, the former president went on live television and blasted the company, calling their decision a flat-out betrayal. Then came the real bombshell, a threat to slap a 200% tariff on every John Deere product made outside U.S. borders. The message was crystal clear. If you move jobs out, your products won't come back in without paying a steep political price. The media jumped on the story. Investors tensed up. And across rural America, people watched anxiously, caught between the man many of them voted for and the company their livelihoods depend on. This wasn't just a headline. It was a reckoning. John Deere didn't make this decision overnight. Behind closed doors, their board had been wrestling with it for months. They had the numbers, they saw the trends, and they felt the pressure. Manufacturing in the U.S. had become significantly more expensive. Supply chains were jammed, labor was hard to find, and competitors overseas, they were moving faster, smarter, and at a fraction of the cost. Companies like Kubota in Japan and Mahindra in India had already mastered lean manufacturing across Asia. Deere was falling behind. The solution? Mexico, where labor costs are up to 70% lower, the workforce is skilled, and the location offers direct access to booming ag markets in Latin America. But this wasn't just about cutting payroll. It was about staying alive. U.S. ports were backed up. Shipping delays were constant. Raw materials were stuck in limbo. Every disruption was costing Deere time and money. A facility in Mexico promised speed, flexibility, and a foothold in some of the fastest-growing farming economies in the world. In markets like Brazil, Argentina, and Colombia, agriculture isn't just growing, it's booming. So John Deere made its move. A $55 million investment in a brand new state-of-the-art facility to manufacture mid-frame skid steer loaders and compact track loaders, machines built specifically for the fastest-growing segment in agriculture, small to mid-size farms. These are the farms that need modern technology, greater efficiency, and above all, affordability. To Deere, this wasn't betrayal, it was strategy. But to Donald Trump, it felt personal. Before we go further, don't forget to hit that subscribe button to stay updated and show your support. Standing behind a podium in Iowa, Trump roared, "John Deere just spit in the face of American workers. They want to build our machines somewhere else? Fine, but they won't bring them back here without paying dearly." It was classic red meat for the base, but also something more. It was a warning shot to Deere, to other manufacturers, to Wall Street. Trump was drawing a line in the sand, and anyone who crossed it would pay a political price. But Deere didn't flinch. There was no apology, no retreat. Instead, the company released a calm but clear statement. The new Mexican plant would account for less than 5% of Deere's total North American output. The company's core manufacturing, large tractors, combines, and harvesters, would remain firmly rooted in the U.S., with production continuing in Iowa, Illinois, and other American facilities. They weren't abandoning America. They were optimizing for a global future. Then came the market's verdict. After a brief dip, Deere's stock bounced back. Analysts from Bloomberg and Goldman Sachs praised the move as smart, strategic, and essential. The math was clear. Farming demand is shifting south, and production needs to follow. As for Trump's tariff threats, they might sting in the short term, but not enough to derail a decades-long growth plan. In fact, some insiders think those very threats could work in Deere's favor. If tariffs hit all foreign-built equipment, Deere, despite its Mexico expansion, would still have a strong advantage. Why? Because the bulk of its machines are still built right here in the U.S. Competitors like Mahindra, Yanmar, and Kubota don't have the same U.S. manufacturing footprint as John Deere. So ironically, if Trump's tariffs go through, they might hurt Deere's rivals even more. But in the court of public opinion, logic didn't matter. Rural voters, especially in key swing states, started to split. On Facebook groups, in town halls, and on talk radio, the controversy unfolded like a family feud. One side defended Deere as a crucial business doing what it must to survive in a global economy. The other side saw betrayal, arguing that loyalty to American workers should come first, no matter the cost. Soon, the political pressure followed. Trump's allies in Congress jumped into the fray. Senators from deep red states issued statements urging Deere to rethink its decision. The House Agriculture Committee scheduled hearings, and the White House began floating the idea of auditing government contracts to make sure taxpayer money wasn't being used to buy equipment built outside the U.S. Behind the scenes, Deere's lobbyists sprang into action. They met with trade officials. They sat down with congressional staffers. And they delivered a clear message. John Deere isn't just a company. It's part of the backbone of rural America. Communities rely on their equipment. Infrastructure depends on it. And punishing Deere with tariffs would end up hurting the very farmers those policies claim to protect. But Trump doubled down. At a rally in Ohio, he brought up Deere 5 times, each mention followed by loud cheers. He promised tariffs so steep the company would never forget. The crowd loved it. Still, Deere didn't blink. Because this wasn't just about one company, it had become a line in the sand. Other global corporations were watching closely. If Deere gave in, it would send a chilling message. No company can make a strategic decision without risking political retaliation. But if Deere held firm, it could set a new precedent, one where business leaders stand by data, not campaign pressure. And so far, Deere is standing firm. Meanwhile, the company is looking beyond borders and beyond backlash. It's not just rethinking where it builds, it's reimagining what it builds. The future of agriculture isn't red, white, or even green. It's electric, it's autonomous, it's smart. Deere is investing heavily in automation. Its driverless tractors are already rolling across American fields. Its software division is building AI systems that can manage an entire farm from a single tablet. Drones scout for pests. Sprayers apply fertilizer with pinpoint precision. Real-time data flows between machines, creating an ecosystem that's faster, cleaner, and more efficient than ever before. John Deere isn't just betting on geography, it's betting on the future. And here's the real kicker. These machines don't care where they're built. They care about one thing: how fast they can work and how efficiently they perform. Which brings us back to the myth that Donald Trump keeps selling. The promise of bringing manufacturing jobs back home. It sounds powerful. It gets applause. But in today's world of advanced manufacturing, it just doesn't hold up. Because even if John Deere moved every single factory back to Iowa tomorrow, those jobs wouldn't go to people. They'd go to robots. Automation doesn't care about politics. It's not emotional. It's mathematical. According to Oxford Economics, up to 20 million manufacturing jobs could vanish worldwide by 2030, replaced by machines. And that trend? It's accelerating. Deere isn't dodging American labor. It's confronting a future where the very concept of labor is being rewritten. In that light, the move to Mexico isn't just a cost-saving decision. It's evolutionary. It signals something bigger, that we're no longer in the age of geography. We're in the age of technology. And that's what makes this moment so symbolic. On one side, a populist leader promising to revive a world that no longer exists. On the other, a global company adapting to the world that already has arrived. It's nostalgia versus innovation, emotion versus execution. And caught in the middle is the American farmer, trying to make sense of it all, trying to figure out who's really fighting for them. So, what happens next? That part is up to you. Will voters punish Deere for making a move it believes is necessary to survive? Or will they push back against Trump for threatening access to the very machines that keep their fields alive? Drop your thoughts in the comments, because this fight isn't just about tariffs or tractors, it's about the future. If you found this breakdown helpful, give it a thumbs up and hit subscribe for more deep dives just like this. Stay sharp, stay curious. And remember, the machines are coming. But the politics? They're already here. Thanks for watching.